You ever been in a conversation where people start talking about the stock market and it just feels like they're speaking a totally different language? Well, you're not alone. And today, we're going to change that. Think of this as your personal translator for the world of investing, starting right at square one. So, where do we even begin? Well, how about with a question that honestly affects every single one of us? Seriously, let's just start with this, because it impacts all of us, whether we invest or not. Have you ever had that feeling? You look at your bank account and the number is the same, but you just know that money doesn't go as far as it used to. It's like you're working hard just to stay in the same place. Well, that feeling is real, and there's a name for it. And here it is. The culprit is inflation. You can think of it like a slow leak in your wallet. It's this invisible force that just makes your money less powerful over time. Not too long ago, we saw inflation in the US hit over 9%. So let's say you had your money in a savings account earning, 2% interest. Well, you're still losing 7% of your buying power every year. Your money is literally getting weaker. So what can you do about it? How do you fight back against this? And maybe even get ahead? Well, that brings us right to the heart of our topic today, the stock market. But before we get into the whole shebang, we have to understand the most basic piece of the puzzle. What in the world is a stock? Okay, I love this analogy because it makes it so simple. Just picture a company you know and love, maybe it's Apple or Starbucks or whatever, and imagine that entire company is one giant, delicious cake. When you buy a stock, you're not just giving them money for nothing. You are literally buying a tiny slice of that cake. It's yours. You own it. Right, so that's the key idea. A stock is ownership. You're not just a customer anymore. You become what's called a shareholder. You are a part owner. And that means you're now a partner in that company's future. If the business does well and grows, the value of your little slice of the cake can grow too. Of course, if it struggles, the value can go down. You're basically along for the ride. Now, you might be wondering, why would a massive, successful company want to sell off little pieces of itself to regular people like you and me? Well, it's all about raising cash to grow even bigger. Think about it. Instead of going to a bank and getting a huge loan with tons of interest, they can sell shares to the public. It's like clean money for them. They don't have to pay it back. They use that cash to build new things, invent new products, and expand their business, and we get to own a piece of that growth. All right, so now we know what a stock is, but here's where a lot of beginners get really tripped up. We need to talk about the two main ways people play the game. There's investing, and then there's trading. And trust me, they are not the same thing. Understanding this difference is absolutely crucial. This chart just lays it all out perfectly. Investing, that's the long game. You're thinking in years, not days. Your goal is to slowly build wealth by owning a piece of a great business. You actually care about how the company is doing. Now, trading is the opposite. It's all about the short term, trying to make a quick buck off of those daily price swings. But, and this is a big but, look at that last line. For most people who stick with long-term investing, the success rate is pretty high. For short-term trading, it's estimated that only about 2% of people actually make money consistently. For beginners, the choice is pretty clear, right? And who better to sum it up than the legend himself, Warren Buffett? This quote is everything. It really gets to the core of the investing mindset. It's not about trying to guess what a stock will do in the next 10 minutes. It's about having the conviction to own a piece of a business for the next 10 years. Okay, so you're on board. You're thinking like an investor, not a gambler. Awesome. But now you look out at the market, and there are literally thousands of companies to choose from. It's overwhelming. So how on earth do you start to find the good ones? Well, let's create a simple filter to help you cut through the noise. Okay, think of this as your starter toolkit. These are just 5 simple checks to find potentially solid companies. First, the PE ratio. It just asks, is the price fair compared to how much money the company makes? A low number is good. Second, price to book. This asks, is the price low compared to what the company is actually worth on paper? Again, lower is better. Numbers 3 and 4 are all about safety. We want companies with low debt that can easily pay their bills. And finally, we focus on big, well-known companies. Why? Because they tend to be more stable, which is perfect when you're just starting out. Now, I cannot stress this enough. This checklist is not a magic wand. It doesn't guarantee you'll find a winner. What it does do is help you build a list of interesting companies that are worth a closer look. After you run this filter, the real work begins researching what the company actually does and deciding if you believe in its future. We've talked about the why, beating inflation. We've talked about the what, a stock is ownership. And now it's time for the how, You've done your homework, you've found a company you're excited about, and you're ready to buy that first slice of the cake. So let's walk through exactly how you do it. This is it. This is the moment it all becomes real. And I know it can feel like a huge, intimidating step, but I promise you, the actual process is way more straightforward than you probably think. Let's just break it down. It really is just 4 simple steps. First, you need a broker. That's just the company or app that gives you access to the market. Second, you open an account with them. It's kind of like opening a bank account. Third, you put some money in that account. And finally, the fun part. You search for the company's unique stock symbol, you click that buy button, and boom. That's it. You are officially a shareholder. So let's just quickly wrap up everything we've covered. We started with the big problem. Inflation is making your money worth less. We found a potential solution, investing. We learned that a stock means you are an owner, so you got to think like one. We know the difference between long-term investing and short-term gambling. And please, please remember this. You can lose money. Never, ever invest more than you are truly okay with losing. The best way to start is small, stay curious, and never stop learning. And that's where we'll leave it. You now have the basic map and the tools to get started. The next step? Well, that's up to you. So think about it. What companies do you interact with every single day? Which businesses do you truly admire? Now that you know how, which one will you look into first? That simple question is where the real journey begins. Thanks so much for watching.